There is a lot of selling pressure ongoing in the stock market now, especially those who bought at the all-time highs. Now, they are so confused if they should sell these stocks or they should give up on the stock market. But before you do that, we are going to tell you 4 stocks you should not sell, because we've seen these market moves in circles and we've had the experience to tell you that you should not sell these stocks because you will not be happy that you actually did in some few months from now. Now, welcome to Clockwise. My name is Providence, and today we'll be discussing something very, very interesting, and I beg you to stay to the end of this particular show. Now, I have my stock analyst that is here, the one that says he sleeps on the charts. He's always with the fundamentals of these businesses and companies, so he's here to tell us that these stocks looks good on the books, meaning that they are going to look good in the charts. Now, with a resounding virtual round of applause, welcome, Mr. Kane. Welcome to Clockwise.
Thank you very much for having me.
You see, there's something I said recently, and I want to actually analyze it again. You see, people that are actually buying stocks now are people that sold to people when it was at the all-time highs. Now, these institutional investors sold to retail traders when the stocks were at the all-time highs. Currently now, the price has gone down. They have come back to buy the stocks, waiting to resell again to the at the all-time highs. Now, how do you see such analogy? That's the circle we see every time.
You know, it is very interesting because I remember very well that we talked about, there's a name that comes to mind. And, you know, that's why when they say retailers, retail is, they use that word dump money. You know, it's actually, sometimes it's not entirely incorrect because to succeed, especially in investing, you need, it should be knowledge based.
Yeah.
That's why we spend time
To analyze.
to analyze, to give. We don't just come in and say, buy this, buy this, buy this.
Without any reason.
We tell you exactly what we are seeing and why we believe. And that's why most of the time, some of the calls that we've made here have actually gotten a lot of our followers, some decent returns. Now, why do investors do this? Why do retail investors do this? Because most times they're chasing hype. Someone posts something on TikTok, on Instagram, on Facebook, on WhatsApp story, how he's made a ton of money, and the next thing you see people say, please, custom for me, link me in, and all of that. People will jump in. That's not how it is done. It is done, the money is made when there's blood in the streets, including your own blood.
Yeah.
So that's when to buy. Now, which now takes me to the first name I would mention.
I'm sorry for cutting. Now, give us reasons why you feel that people should not sell these stocks, because people are actually selling.
No, yeah, I mean that's the reality. The thing is that I there are some things I look at. Like I told you, there is always market dislocation where the fundamentals and the price action diverge.
Okay.
So it is not that anything has changed from the fundamentals, but it's just that people have, of course, the fear and greed moves the market. So out of fear, people have divested from some stocks, providing generational buy opportunities for those stocks. I mean, so there are some names that were so high before. Nothing has changed between that time and now. Some of them have corrected more than 40%. Some of them 20%. These are buying opportunities. But the fact is that, just like I've always said, stocks are the only assets that people fear or people refuse to buy when they are on sale.
Yeah.
That is basically the challenge. That is basically the reason why you see people not fearing, we need to sell this, because someone goes on Twitter or someone goes on Instagram or TikTok and says, I made so much loss on this. Maybe post on a 10-15% drawdown on a particular name when they literally bought at the top. And then other people, bandwagon effect, people also rushing to sell. No, that's not from an informed perspective. What has changed? What about the fundamentals? If take profit is okay. I do it. Take profit, portfolio balancing, and all of that. Let me give you an example. Micron. I've actually trimmed Micron, bought again, trimmed, bought for some time. You know, not because I don't believe. Why do I have to buy again when I trimmed like 2 weeks ago? It's because I've seen that it has come down to a price point where I believe it is properly discounted, and then I buy back in, and then go.
Now,
That goes
before
down.
you actually make the list, 4 of them. Now, I want you to speak to this. You see, most people actually buy stocks because they don't even have a reason for buying. They just like buy this, they just buy because I believe institutional investors have a goal, and those that are selling currently are those who never had a reason for actually investing in the first place.
Yes.
That's why they're actually selling now, because they are selling based on the movements. Yeah, the price was going up. Now it was a bull market, everybody bought. It's now a bear market, everybody is selling. But they've not asked themselves the question, who are we actually selling to? Who is buying these stocks now? Do you understand? So speak to that.
So that's the point. So you have to. I try to give perspective when I talk on this show. I try to give perspective of how an institutional player thinks. Remember, I've always said swim with the whales. That's you can't afford to swim against the whale. You'll be taken out. Swim with the whales. Look at what institutional investors are doing, and then position yourself accordingly. Now, don't follow hype. I can't say it enough. Don't follow hype. You have to give some time. Look at the fundamentals of some of these businesses. You are when you buy a stock, you are literally buying part of a business. Imagine if someone comes to you and says, "I'm starting I'm starting a bakery. I'm starting a shop. I'm starting this. Give me money. Let me put into that business." Would you just go inside and say, "Oh, it's because it's you"? I'll just go inside, pick money, and give to? No, you ask questions. That's just it. So people have to understand that is exactly what you do when you buy stock. You are literally buying a tiny share of a company. So what that means is that you need to ask the right question
To know why you are buying.
To know why you are buying,
Why you're
and
investing.
know the possibility of your money not disappearing into thin air. Good. So that's exactly what you do. So the same thing applies to buying stocks. But unfortunately, what most retail investors do is that they don't really look at that. They just, someone posted on Twitter that this has returned 60%. Let me rush it.
And that's a stock they bought when it was in the bear market.
Well, by the way, sometimes that's a stock they bought. They don't tell you where they bought it. So that's why I say, when is the best time to sell? If there is ever a best time to sell. Or when is a good time to sell? It is when you are taking that screenshot. I would advise the guy that is posting that screenshot on Twitter.
Sell it.
It's good to sell into a momentum than to sell when the market is tanking.
Yeah, it's good to actually, when you're moving through elevator,
when
you can leave in any of the floor. Riding up and also riding down.
To the bottom. So that's exactly the point.
All right, let's hear your list.
So my list, number one would be, there was a name that we called $910. I still remember. I think $910 or something. Yeah. It rallied all the way up to 2,100 and something dollars. And then we screamed on top of our voices that people should take profit.
Yes, readjust, take profit, rebalance your portfolio.
Rebalance, because we had from 900, that was already more than 2x on your money. So we said it, screamed on top of our lungs that people should take profit. Now, that name has come back down to 1,200 and something. And that name is Aradel. So, is this a good time for you to sell out of Aradel? I don't think so. Because, number one, look at the numbers that Aradel came up with first quarter. It was very strong. Those numbers were strong. By any thought, those numbers were strong. Look at FY 2025. Very strong. I know someone would say, okay, they were strong because of the price of crude. Yes. But remember, I had said something that most of these oil and gas exploration companies make a ton of money from gas too. So I believe strongly. By the way, what do you think about when you say prices have slumped? When did they start going down? They started going down in the later part of the second quarter.
Yeah.
So, meaning that these guys still maintain those arbitrage. And by the way, so just so you know, sometimes the price of oil, the way people buy oil is not, you just go to the market and just pick up oil. No. You do what we call futures contracts. And say, if someone has told you, listen, I'm going to buy this oil at 105 naira, and then you are going to supply me over the next 3 months. It is not that in the third month, no, that contract is already there. So what that means is that earning at that price has already been locked in.
Yeah.
And so the sudden slump in the price of oil is actually like what the future price would be will reflect in actually the future price. So I expect Aradel to still do very well for second quarter earnings. So the only thing I saw there which I was not very, very favorably disposed to was their cost. The cost was still high. The cost was it was disproportionately high. But if you look at the earnings, if you look at the earnings per share and all of that, that was a significant jump.
Yeah.
To 100 and something, all the way from 25 to 100 and something. So that for me it was more than 4x actually. So we expect this to continue. Are you going to sell into or sell out of a name that has been seriously punished? I believe for Aradel to move from 2,100 over 2,100 to 1,200, that's almost a 40% decline. That means that name has been seriously punished. You cannot live where you have endured the punishment actually already.
You can't go out at this point.
So you can't go out at this point. So I think at this point is where you should even think of coming, because by the time the earnings figure coming for H1, you are going to see most of these names jump back up. And remember, I was screaming buy. People did not buy. Was screaming sell. Some people did not sell. Now I'm saying it could be a time for you to do what? To get back in.
No sell.
That name has been seriously punished. By the way, whatever Aradel, even if Aradel goes down, it can't go down as much as it has come down already. So the downside risk is way less than the upside return.
And if you had invested from the beginning of this year, you are still in profit.
You are still in profit.
Very huge profit, sir.
Very huge profit. You are still in profit. So what we are saying in essence is that Aradel for me is a name that you should think about reallocate. That name has been punished. So you think of continue to reallocate to Aradel. If there's going to be any downdraft, I'm not sure it's going to be to the size of what we have already seen. So you want to allocate into Aradel at this point.
Aradel. After Aradel, the second one.
The next one is, I'm looking at names that have been seriously punished. MTN. MTN went down from 900 something to 700 and something. I don't know what the figure it will be at the time you're watching this video, but it will still be in the 700s. It might still be in the 700s. So the fact is, that's a very huge punishment for a name like MTN. For a name that it already has interim dividend. So you see that, the market has punished MTN very seriously. The correction has come in. A lot of dislocation has happened on MTN, but when it comes to the powerhouse in data, in voice calls, in telecom service provider, they even have more mobile money. It's MTN. What does that tell you? It tells you that MTN remains a very strong name with very strong fundamentals. Remember what drives the Nigerian market, especially stock prices? One, dividends. Number two, cash flow. Number three, earnings growth. I believe that in all of those three parameters, MTN will come out very strong for their second quarter earnings or second quarter report. So for me, I think MTN still remains a behemoth. And therefore, I don't think this is the time for you to sell out. I know someone called me. She said she was literally crying. Say, can you imagine MTN that I bought at 910 naira is now at 720.
Why is it already down? Why are you selling it?
No, so she was like, she even thinks that it will transfer. And people are even telling her. Some people our friends on TikTok are already telling her that it might go down to 500. She should sell out of at this point. Said, you are selling 2 weeks before earnings call. 2 weeks before earnings call. I don't think that's a good decision. Now, once the earnings start coming in, that's a very significant tailwind. Months where there are no earnings, you see price action is almost always flat. But when you have earnings coming, investors react immediately. So even as much, and by the way, MTN doesn't really have any serious regulatory overhang. Unlike some of the other names we might have on this list. MTN doesn't have that. So that means it's a basic market dislocation that is affecting MTN. And then we also expect it to recover. It's going to lead the recovery when the market turns around.
Okay, all right. Now, the third one.
The third one would be GTCO.
Yeah, GTCO.
Now I know that GTCO has corrected very serious from 157 to 125. It actually dipped below 120 as a matter of fact. So GTCO has corrected very seriously. Now I think it's actually witnessed a failure of its profit taking. GTCO has an overhang, of course, because of the holdcos, the new regulation on holdcos, which we believe that has a 90% chance of actually coming through. But I believe that GTCO might not, even if GTCO has to go to the market to raise more funds to get that 20% buffer that was discussed in the guidelines. I think that GTCO still remains a strong name. Remember, GTCO is one of the two banks, two of the foggers that is going to pay dividends. So you have an interaction of a headwind and a tailwind. So the headwind being, which I believe has been largely priced in. If you look at what has affected Face Holdco, if you look at GTCO, then you realize that those names and Access Corp, Access Holding, you realize that those names have been punished already, or based on because of the new rules around holdcos. So I think that a lot of this has already been priced in. So what that means is that particular headwind is going to be largely muted when it eventually happens. There's something we call buy the rumor, sell the news. The same thing. So sell the rumor, buy the news. So I think that the rumor has already been, or that particular guideline has already been priced in. So what is left is mostly a tailwind. So what is a tailwind? The tailwind is that GTCO is most likely going to pay dividends.
Okay.
And Nigerian investors respond very seriously to
news of
dividends. So I believe that. Therefore, that GTCO is going to make a very serious impression.
Okay.
Once the earnings call starts coming in.
Okay.
So again, GTCO still remains, like I said, in terms of balance sheet strength, in terms of earnings,
their loan book
growth, and all, very clean loan book, and all of that. In terms of balance sheet discipline, they're still there. So I think that actually works very well for GTCO.
Okay.
The next one, the last one I would mention, which is, is something that people could have different opinions about. But for me, I think it is still a strong position for you to hold on to, would be Zenith.
Okay.
Zenith. I mentioned GTCO. Now I need to mention Zenith. Zenith, I'm saying this because the kind of price action people saw on Zenith, someone literally took a screenshot of it and said, are we in the Armageddon already? so Zenith really went down to, in fact, it went down almost 100 naira, down from 136 to 137. But let me say this. Remember that the most regulated sector of the Nigerian exchange is the most regulated sector of the Nigerian exchange is the financials, the financial space. That is why you look at both fixed income, even in the equity markets, the most regulated part is the financials. Banks have already consolidated. There's a lot of a huge investor interest. The likelihood of a tier 1 bank or even a tier 2 bank failing is now very slim. Now, that makes investors comfortable. Remember, when a bank fails, the investors are the ones that lose, actually. The depositors are covered by NDIC, even though it's just about
a little percentage.
It's tiny. Imagine if you have 10 million in the bank and you are told you are going to be covered up to 500,000.
It doesn't work at all.
So, but in the scheme of things, investors are usually the ones that lose out. So, but now that you've had banks that have been fully capitalized, the likelihood of failure
It's very slim.
is low. And now they're now bringing in these whole core rules that will kind of reduce to the barest minimum
pressure.
contagion risk, from different subsidiaries.
Oh, yeah.
Good. So that is to strengthen that strengthens the financial space. So, and that's why you see we had 10 billion coming in terms of FDI, but about 90-95% of that went to financials, fixed income, and then so you realize that space has been, apart from, I know interest rates have been in the fixed income has been very attractive, but I mean within the finance space is still very very robust. So I dare say, and by the way, this is from experience, the financials are most likely going to lead the recovery rally. So, like they say, don't try to time the market.
Yeah.
Time in the market will always be time in the market. Yeah. So, you want to look at names that are most likely going to lead the recovery rally.
And the financials actually.
And the financials are going to be there. So, beyond this, even Zenith Bank is also paying dividends. So it has a lot of things working for it. It is sitting in a space that is very regulated. It is sitting in a space that investors consider as being kind of strong. It is sitting in a space that leads recovery rallies, and it is most likely going to pay dividends. Then in terms of balance sheet discipline, there's nobody that does it as much as Zenith Bank.
Okay.
Yes. In terms of it's the largest by market capitalization. It is the return on equity is huge. Now Zenith Bank even has another advantage because Zenith Bank can sit in two portfolios. It can sit in a growth portfolio. And it can also sit in a dividend portfolio. So when you bestride two very important portfolios, so for me, I'm a growth value investor. You are a dividend investor. Yeah. So that means I can have reasons to hold Zenith Bank. You can have reason to hold Zenith Bank. So that's a positive. That's a plus for Zenith Bank, really. Okay. So that in itself makes it. I don't think the downside risk at this point is comparable to the upside return. So I think the downside risk is lower. Therefore, if you should be able to take any move at this point, you should take advantage of this dislocation to see how you can begin to reallocate to Zenith Bank, reallocate to GTCO, reallocate to MTN, and of course reallocate to
Now you've talked about Zenith Bank, Aradel, GTCO, and MTN. I'm so surprised you've not mentioned Access Bank.
No,
have you given up?
No, I've not given up on Access Bank. No, listen. Why am I saying this? I'm saying the question was which one should you not sell? Yeah. Which one? I was little focused on which one would lead the recovery rally.
Okay.
Yes, Access Bank would still would participate in that recovery rally. But remember, in terms of the guys that have the cleanest record, it is these are some of the names. First quarter of 2026. Access Bank still had 79 billion in impairment charge. So it is not Uhuru at this point. Yeah. But I still know that we don't know when we see the result, then for second quarter, then we know how far they've gone in terms of addressing their impairment charge issues. So I think that, and then Access Bank might not, because they're still dealing with impairment charge issues, might not pay dividends. So, but I still believe that this recovery is going to be like a rising tide that lifts all boats. So Access Bank is still a strong play for me. I'm positioning Access Bank as a value play.
Okay.
Access Bank for me is a value play. Access Bank for me is selling at an insanely cheap price, but the name is still strong. They're still sitting on 52 trillion in terms of assets. They're still, a Pan-African bank. They still have presence beyond Nigeria. So I think. I know why they have been punished. I think of all the fugas, there's none that has been punished like Access Bank. The next one is UBA. Those two names have been seriously punished. So at this point, it is like when they say if a guy that is someone that's on the ground fears no fall. So I think what cannot actually happen from here, the downside risk is now very minimal compared to the upside return.
Okay.
That's why I keep on saying.
All right. Apart from
allocate to
Access Bank that you just actually did, from the four banks, you say from the four stocks you should not sell. If you were to reallocate, for instance, you want to rebalance your portfolio, how will you reallocate your resources to them?
So first of all, I would really look at one of the most punished, Aradel.
Okay.
I would go into Aradel. A chunk will go into Aradel.
Like how many percent?
It is 30%.
Okay, 30%.
30 to 40% will go to Aradel because it has been seriously punished.
So the remaining 60%.
Then the remaining 60% I will allocate to, of course, GTCO, because GTCO is most likely going to be the one to really lead the rally. GTCO has been down over 20%, or almost over 20%, as a matter of fact. Then I would do MTN, because MTN for me is a very strong play. MTN is paying dividend. Yes, I've announced interim dividends. MTN is going to pay a dividend, and so that will move. So I'm looking at MTN more like both a growth play as well as a dividend play. And then I will also do Zenith Bank. Zenith Bank, like I told you,
20%.
I will do Zenith Bank maybe 20%, because I might even do 25%, because Zenith Bank for me sits in two portfolios,
Dividends
growth
and
dividend portfolio. So that's how I'm going to.
Okay. What of MTN?
MTN I would do up to 20%. So that MTN and Zenith Bank should be like 45%.
Okay.
Or maybe around 40%. Then Aradel could be around 30%. That's 30 to 40%. That will be
70%.
No, that will be 40 plus 40 is already 80. So 20% will now go to GT.
That's a balanced portfolio. Thank you very much for coming. You've done justice to the conversation. Now, on that note, we'll come to the end of today's episode of Clockwise. Now, please do not forget to like, subscribe, and put on the notification bell on this channel because of the amazing content. Now, if you want to actually speak with us directly or ask any question concerning the stock market, there's a link on our profile page, a community link, a Telegram community link. You can actually click through that link and it will bring you straight to our community where we share daily, real-time conversation about the stock market. Now, my name is Providence, and I'll see you again.